Cryptocurrency is a type of digital currency that runs on decentralized networks and employs advanced cryptographic techniques to safeguard transactions and regulate the generation of new units. It has various advantages over traditional currencies, including increased security, fewer transaction fees, and the possibility for rapid value appreciation. In 2021, cryptocurrencies enjoyed a meteoric rise in popularity, only to face a swift downturn the following year with the collapse of major exchanges like FTX. As doubts loom, many are left wondering, is crypto dead? Bitcoin, for example, is a sort of cryptocurrency that was originally billed as the future of money. Despite its growing popularity, Bitcoin faces a variety of challenges, including regulatory scrutiny, market volatility, and security concerns. Many advocates believe it has the potential to alter finance and empower individuals by boosting financial freedom and access to global markets. In November 2021, the price of Bitcoin peaked at over $68,000. A year later, the price had dropped below $18,000, and the cryptocurrency industry witnessed the collapse of the cryptocurrency exchange FTX. Today, the promising world of virtual currencies is growing more fringe and isolated, and some are asking, is crypto dead? However, some investors think that crypto is done, while others think that it will likely survive, but only after more firms and currencies crash and burn. With several major cryptocurrency enterprises falling in recent months, the industry that offered an alternative to the existing global financial paradigm is suddenly facing existential questions. Both people and investors are keeping an eye on its security and consistency, and it will only need to do better to ignite greater attention. So in this video, we are going to answer a few questions. Why do some investors think crypto is done? Why do other investors think crypto can survive? What is the future of crypto? Critics argue that regulatory crackdowns and market turmoil have sounded the death knell for crypto. Price collapses, investor exodus, and widespread fraud have eroded confidence in the industry's viability. Cryptocurrencies have become a popular tool with criminals for nefarious activities such as money laundering and illicit purchases. The case of Dread Pirate Roberts, who ran a marketplace to sell drugs on the dark web, is already well known. Cryptocurrencies have also become a favorite of hackers who use them for ransomware activities. The U.S. Securities and Exchange Commission, SEC, a federal agency that regulates securities and protects investors, filed lawsuits against Binance and Coinbase, two of the world's biggest crypto exchanges on which investors buy and trade a large offering of cryptocurrencies. The SEC's main allegation against Coinbase is that it's running an unregistered securities exchange, like if the NASDAQ independently operated without any regulatory oversight. Binance faces the same charge, as well as additional accusations that it appropriated billions of dollars in customers' funds for its CEO's trading firm, misled its customers, lied to regulators, and more. Binance has about 90 million users according to CoinMarketCap, while Coinbase reported that it had 110 million verified users as of 2022. Will Wilkinson, the head of policy at TBD, a Bitcoin-focused subsidiary of the finance titan block, mentioned, "It is undoubtedly in decline, with hundreds of individual and institutional investors writing it off. The most obvious issue is scams. In the world of cryptocurrency, large corporations are fraud. Little businesses are scams. Stablecoins, exchanges, NFT schemes, ICOs, and tokens are all scams. Businesses run by self-proclaimed altruists are fraudulent. Firms run by the shadiest people you can think of are scams. There have been a lot of putatively decentralized Web3 companies that were really just three guys and a pair of servers in a pump-and-dump coin scheme. Though they claim to be an anonymous form of transaction, cryptocurrencies are pseudonymous. They leave a digital trail that agencies like the Federal Bureau of Investigation, FBI, can follow. This opens up the possibility for governments, authorities, and others to track financial transactions. One of the conceits of cryptocurrencies is that anyone may mine them with a computer and an internet connection. However, mining famous cryptocurrencies requires a significant amount of energy, sometimes more than entire countries spend. Mining's high energy costs and volatility have concentrated it among giant corporations with billions of dollars in income. Prices for cryptocurrencies traded on public marketplaces are volatile, thus accurate price monitoring is required. For example, Bitcoin's value has fluctuated dramatically, rising to nearly $65,000 in November 2021 before falling to just over $20,000 a year and a half later. As a result, many individuals view cryptocurrencies as a passing fad or speculative bubble. Lack of understanding. For many investors, the complexity and technical nature of cryptocurrencies pose a significant barrier to entry. The intricacies of blockchain technology, along with the proliferation of new digital assets, can be daunting for those unfamiliar with the space. Despite all of these setbacks, some investors believe that cryptocurrency still has a chance of survival. Nevertheless, certain conditions must be favorable, but it is not impossible. To answer our second question, why do other investors think crypto can survive? Cryptocurrencies represent a new, decentralized approach to money. In this system, centralized intermediaries like banks and monetary organizations are not required to enforce trust and regulate transactions between two parties. Thus, a cryptocurrency-based system reduces the risk of a single point of failure, such as a huge financial institution triggering a cascade of worldwide crises, as was the case in 2008 when large investment banks in the United States failed. Cryptocurrencies promise to make it easier to move payments directly between two people, eliminating the requirement for a trusted third party such as a bank or credit card firm. Decentralized transactions are secured using public and private keys, as well as other incentive systems such as proof of labor or proof of stake. Because Bitcoin transfers do not involve third-party intermediaries, they can be speedier than traditional money transfers. Flash loans and decentralized finance are a prime example of such decentralized transactions. These loans, which are approved without any security, can be performed in seconds and used for trading. Proponents maintain that certain aspects of crypto remain robust. Bitcoin continues to attract investors, while blockchain technology holds promise for disrupting various industries beyond finance. To quote Tim Long, director of the Computational Finance and Risk Management program at the University of Washington, "I think we'll see a lot more bad news before things start looking better for the sector." Cryptocurrency investments can result in returns. Cryptocurrency marketplaces have grown in value over the last decade, reaching about $2 trillion. Bitcoin was worth more than $680 billion in crypto marketplaces as of November 2023. One of the most visible applications of cryptocurrency is being tested in the remittance industry. Cryptocurrencies, such as Bitcoin, are used as intermediary currencies to facilitate international money transfers. Thus, a fiat currency is converted to Bitcoin, or another cryptocurrency, transported across borders, and then converted back to the destination fiat currency with no third-party intervention. Bitcoin remains popular. People still see Bitcoin as a good investment opportunity, and the currency remains a good way to send money in situations where stable banking networks aren't a viable option. For example, to get funds to human rights activists in Ukraine or to climate disaster refugees. Further, Bitcoin has remained resilient through volatile market cycles and is gaining acceptance among mainstream financial institutions. Blockchain is a strong, general-use technology with the potential to disrupt industries outside of finance, including healthcare, voting systems, and supply chain management. As the cryptocurrency market matures, regulatory frameworks are beginning to take shape, providing clarity and stability for investors. Established exchanges and regulatory-compliant platforms are enhancing transparency and trust in the ecosystem. So our last question, what is the future of crypto? Despite the obstacles, some experts believe that crypto's underlying potential could still reshape finance and empower individuals. Overcoming regulatory scrutiny and rebuilding trust are critical steps toward realizing this vision. While the future of cryptocurrency may be uncertain, one thing is clear: it's far from over. Despite the challenges and obstacles it faces, cryptocurrency continues to evolve and adapt, driven by innovation and resilience. As the industry navigates regulatory hurdles and addresses security concerns, it holds the potential to redefine finance and empower individuals worldwide. In conclusion, the fate of cryptocurrency hangs in the balance. Whether it succumbs to regulatory pressure or emerges stronger from adversity depends on its ability to navigate challenges and innovate. The narrative of crypto's demise may be premature. While skepticism persists, the underlying fundamentals of cryptocurrency remain strong, pointing towards a future filled with possibility and potential for growth. Despite its challenges, some experts believe cryptocurrency will continue to thrive in the future. Digital money has the potential to empower Americans to regain financial and political autonomy, which many currently lack. To realize its promise, the crypto business must overcome its reputation for fraud and abuse, rebuild public trust, and demonstrate to central bankers that digital currencies do not threaten monetary policy or payment infrastructure. Thank you for joining us for this exploration of the crypto landscape. Don't forget to like, share, and subscribe for more content like this. Until next time.